Hey everyone, welcome back to the channel. My name is Ryan Hartung, and I'm excited to announce that I'll be starting a new series here called Macro Monday. Every Monday, I will discuss one chart as well as the upcoming economic data for the week that we here in the Macro Institute are paying attention to. And before we get started on the first edition, I want to remind you that we actually have a free newsletter by the same name that also comes out every single Monday. It's a much more in-depth version of what you'll hear today. So if you're looking for more, if you're looking for more information, if you're looking for more details, I'll put a link to that in the description of this video. Okay, so here's our one chart for the week. With debates heating up around the so-called Big Beautiful Bill, we're paying close attention to the Treasury budget release on Wednesday. Most of us at this point have probably caught wind of some of the Twitter drama last week, and at least it started with a conversation on the deficit, although it quickly escalated from there. But the point being, everyone has a take on where the deficit is headed, but to be completely honest, most of those are just complete guesses. Forecasting debt service 5 years out is a fool's errand. Just as an example, take any sort of 2020 projection and then map that to today's reality, and I promise you it's going to be really far off. It's just quite difficult to project where interest rates are going to be and all of the other factors that play into ultimately what the debt level looks like. In terms of our current environment, the X factor here is tariffs. We still don't know what the final policy is going to look like. Point being, new steel tariffs were just announced last week, and we especially don't know what the ultimate response is going to be like from our trading partners, right? So they're still waiting and reacting to news coming out of Washington, and we haven't seen the full impact on all the retaliatory measures that could come our way once the pauses that are currently in place, once some of those start to wind off. So that's why we'll be watching the May budget balance release on Wednesday. And as you can see from the clip chart here, tracking the reaction of the bond market closely based on that data release. So now let's talk about the key economic data releases for the week. Besides the aforementioned Treasury budget release on Wednesday, we'll be paying close attention to Wednesday's CPI and Thursday's PPI release. In terms of inflation, recall that April's CPI and PPI prints were more disinflationary than anticipated, as lower headline figures benefited from lower energy prices, and core was aided by lower prices and services as consumers pulled back spending on discretionary items. However, leading indicators, like regional PMI prices paid components, suggest inflation pressures are building, and we're seeing more and more reports of companies passing on tariff-fueled price increases to consumers. Ultimately, this inflation data will be incredibly insightful for what we can expect from the Fed's June 18th meeting. The odds of a rate cut at this point are down to zero. We're rapidly seeing the odds of a rate cut in the year ahead, while it still seems like it's more likely than not, according to market estimates, that we do get at least one rate cut. The odds of that happening, even by year end, are starting to fall as well. One last thing I want to highlight is Tuesday's NFIB Small Business Survey, as one we pay attention to every time it's released, as it is one of the few sources that we have that give us a ground level view of how Main Street is currently handling rising costs from tariffs. So that's just a survey of small businesses that answer a bunch of questions on how their businesses are doing. So I'm going to leave you there. Again, if you're looking for more in-depth coverage, we have a free weekly newsletter that I will link to in this description of this video. I will be back here next Monday with a similar style quick video to get you ready for the week. Thanks for watching. If you enjoyed, please hit subscribe, and I hope you have a great rest of your week.